Welcome back to Rockstock Channel. It is Wednesday, December 11th, and today we welcome for the first time Michael Dunne, an author, entrepreneur, and keynote speaker who founded Dunne Insights in San Diego 6 years ago after spending 26 years living in Asia, Indonesia, Thailand, Vietnam, and China specifically, focused entirely on the rapidly changing auto industry. According to his website, Dunne Insights delivers world-class intelligence and advisory services to investors, automakers, suppliers, and technology companies looking to capitalize on the electric vehicle and battery markets and associated upstream and midstream supply chains. Michael regularly posts highly insightful and provocative blogs with titles such as The Great China Car Blitzkrieg, Record exports are shattering 100 years of Western car dominance. And also Surrender to China, or Punch Back. It's D-Day for legacy automakers. We would strongly recommend you follow Michael's blogs on LinkedIn and on X at Dunne_insights, or go to his website and register your email to get his newsletter directly at newsletter.dunneinsights.com. Michael published yesterday his latest article, Don't Call It Overcapacity, Competition with Chinese Characteristics. I've not had a chance to read that yet, but to set the stage for today's discussion, I'll quote from his Blitzkrieg blog in September. China will export a stunning 6 million cars to more than 100 countries this year, cementing its position as the world's #1 exporter. The average price of those made in China cars, $19,000. That's less than half the average price of a new car in America and Europe. Consumers in every time zone are leaving their Chevys, VWs, and Hondas in favor of new models from Chery, MG, Changan, and BYD. While Chinese automakers steal chunks of market share, Japanese, European, and American competitors appear to have no response. They are confused and overwhelmed by the speed and strength of the Chinese offensive. According to your post yesterday on X, Michael, China sales just came in for November, up another 50% year on year. China will build 12 million NEVs in 2024, 10 times the US number. In 2025, BYD alone will deliver between 5 and 6 million cars, placing the company among the top global manufacturers worldwide alongside GM and Stellantis. A few years ago, we were making fun of glorified golf carts from like the Wuling Mini, which was made by a joint venture with GM and SAIC. How did we go from there to GM writing off $5 billion from its China operations last month, and BYD coming out of nowhere to grow from 400,000 to this 5 to 6 million figure? Let's start with that, Michael, and then Rodney will ask a bunch of questions, and we could take this in lots of directions.
Tremendous. First off, Howard, thank you so much for having me together with you today. I've been looking forward to this conversation for weeks. How to make sense of this shock, this an earthquake across the Pacific. China's gone from, an also-ran in the minds of people. China, cars? No. What do they have to offer? To suddenly, my goodness, China is overwhelming legacy automakers worldwide in market after market. If you look at the map, China is now exporting to virtually every country in the world except for two, the United States and Canada. On our southern border, Mexico, guess what? China's the #1 supplier of vehicles to the Mexican market today. If you travel there, you're going to see all kinds of Chinese brands on the roads. So it's real. The products are highly price competitive, but they're also high quality. And it has boardrooms in Munich, Tokyo, Detroit, really out of sorts, shocked. Like, well, how do we answer this beast? That's what's going on today as we close the year 2024.
Michael, yeah, I mean, So from our perspective, so I said we look at the impact on lithium and batteries. From your view, from a high level perspective, do you see auto sales growing globally, in line with, say, GDP, or flattening slightly below, or do you see auto sales actually even possibly falling over time
We're talking total
globally?
market or
Total market, yeah.
total market. We're right at or around 85, 90 million. I don't see a big change over the coming years. The biggest story, however, is the speed with which EVs are rising and ICE vehicles are going away. And the story there is highly uneven. It's kind of like how the people in Silicon Valley talk about the future. They say the future's already here, but it's just unevenly distributed. So, what does that mean? In China this year, half of new car sales will be either BEVs or PHEVs. That's remarkable. One in two. That's up from 10% 4 years ago. 10% to 50% in China. 12 million cars. Here in the United States, I don't know, we're hovering around 10%, where China was 5 years ago. And Europe is in between, maybe in the low 20s. So we're seeing adoption at different rates of growth across the world. And I think that'll continue. I don't see global, widespread, across the board adoption of EVs in all countries at the same rate. No.
And so you mentioned the States, and this is an interesting one because Tesla's got the Model Q, which is the Robo-Taxi. You've got Tony Sieber and others, having a view on what that means for car demand. Could that increase demand, or could that, if you have something that's automated and can run, are we going to see a drop in car sales as we see robo-taxis get introduced?
That is the million-dollar question out there. Certainly, Tesla's valuation recently reflects great belief that Elon's going to be able to deliver on this promise of, he calls his company not a car company anymore, but an AI and robotics company. So he's all in. He himself has said, without autonomy, Tesla's valuation probably should be zero. So he's highly confident that he's going to get there. I feel like we're not there in 2025. It'll take a few years. So in the meantime, the rest of the world is getting along and saying, what kind of car should I buy? We're not in the moment of takeoff for robo-taxis in 2025. I think it'll be closer to 2030 before we see that.
Okay, and one of the other trends that you mentioned, which again has really shot up, is PHEVs and EREVs, their market share, and the growing, how quickly they've grown in China and elsewhere. And NIO is now planning to launch its first PHEV in 2026. So, in your view, is the trend of the growth in sales in these two categories likely to continue? Is this something that's here to stay?
Absolutely. If you look at China, you say China and people immediately go to pure electric vehicles. But the reality is that China's market leader, BYD, this year will sell 4 million cars. That's as big as Ford. In fact, in the most recent month in November, they sold more cars than Ford did globally. What are they selling? 60% of what BYD is delivering are PHEVs, not the BEVs. And companies that were previously pure BEV, like NIO, are saying, wait a second, let's be pragmatic. What does the customer want? The customer in China and the United States, and even arguably in Europe, is we want to have the peace of mind of a PHEV because we don't have to stress over the reliability and convenience and quickness of a charging station. That just makes common sense. So we're seeing it not just in China, but increasingly in the United States. Look for more and more products powered by EREVs or PHEVs. Why? Here in the United States, we like to go long distances, drive big rigs at high speeds. And if we know the battery business, that's the kind of thing that Mr. Battery doesn't love. So let's pivot to PHEVs, which gives us the flexibility to move between the engine and the battery.
So places like Africa, where I'm at now, don't have extensive charging infrastructure. So I mean, I think I stand corrected. In Cape Town, the city of 4 million people, I think there are 4 public charging stations, so something like that. So
they're up to 4.
They've built a few more, but essentially, PHEVs looks like for regions like this. Looks like a good interim technology before you go to full electric. So I know that from the export side in China, the PHEVs was less than the full BEVs. But are we likely to see that number pick up? And more broadly as well, as do you think that Chinese auto exports, and obviously in particular EVs, is going to continue to grow at breakneck speeds?
Let's break out that 6 million that they'll export this year. 75% of those are actually ICE-powered vehicles. Of the 6 million, most of those are gasoline-powered vehicles. So what's going on there? You have inside China enormous capacity. Automakers were for years building gasoline-powered vehicles. They're no longer in demand. So they've pivoted that capacity and they're shipping like crazy these gasoline-powered vehicles to markets worldwide. So that's number one. Second thing is a great case in point is BYD went into Mexico a year and a half ago with pure BEVs and said, this is our strategy. We're a world leader in BEVs. We'll sell it into Mexico. It went nowhere for exactly the reasons you're talking about. The charging infrastructure wasn't there. So they've reset, and now virtually everything they ship, BYD ships to Mexico, is PHEV, led by their newest product, this tremendous, good-looking mid-sized truck called the Shark. That's a PHEV, not a BEV. So this is the trend globally.
Okay, and the 800-pound gorilla in the room is the amount of production capacity and auto production capacity in China. The number is staggering. It's literally in terms of what they can produce in terms of world demand. So where is this all going, Michael? How's this all going to play out? Because these guys can just chew up all of the demand in the world.
The thing that keeps executives in America and Germany and Japan and Korea up at night is that if you look at it, China today as a manufacturing base for cars has the capability to build cars at costs that are 25 to 30% lower than any other country in the world. Now that's a staggering advantage. So how do you compete with that? They don't have an answer yet. And if you set aside, political sensitivities and jobs and industries, if you're just say you wanted to start your own company tomorrow, where would you manufacture your car? No question about it. You'd go to China because it has the supply chains, it has the speed, the scale, the lower cost, the subsidies. It's like heaven for car manufacturing, not only for the Chinese manufacturers, but keep in mind, half of Tesla's global production is based in China. GM, Ford, Volkswagen, BMW also manufacture in China for export to global markets. So left alone, you could see a day where all global car manufacturing is centered in one country, China. That's the tension that's arising right now. That's why we have 100% tariffs here in the United States and in Canada. That's why Europe just jacked up their tariffs on Chinese imports, because they look at it and they say, my goodness, we don't have it. They could overwhelm our industry, as China has already done with solar panels, with shipbuilding, with steel. Here we go with cars. If we don't have the tariffs, Elon said, Chinese automakers would pretty much demolish most legacy car makers overnight. That's how dire things are suddenly right here and
M-
right now. Not like 10 years in the future, but it's
M-
on.
Michael, it's crazy, and but it can't happen, right? Like America won't let all of the auto industry to go to China. And if you look at the politics of things, in America, they complain about unfair competition. In your latest note, you're talking about it's competition with Chinese characteristics, but again, going back to the question which I started with, we were laughing. I remember Rodney, we were talking about glorified golf carts, the Wuling Mini, right? That was a few years ago. So, and then Tesla was welcomed into China in their Shanghai factory. They built it in like 8 months. They allowed for the first time with an automaker to come in, and they gave them 100%, they could own 100%, and they gave them soft loans. So how much impact did that Tesla, allowing the Tesla to come in, impact and improve, BYD and the other, Chinese autos? And I want to make a comment as well. A lot of the Chinese auto companies they're new companies. They're not the legacy ICE companies, so it's not just BYD, but NIO, LI Auto, XPeng, and those companies are actually listed on U.S. exchanges, which is interesting. So there's a lot of questions like embedded in this. Like America had, a couple of years ago, a whole bunch of companies went public, Fisker, Nikola, Canoo, and Rivian, Lucid, but it's only really like Rivian that looks like it's, has a chance, relative to Tesla. So there's a lot of questions about it. There's like, how did China do it? Are these companies making any profits, right? Is it, how important are subsidies? How important is, the integrated localized supply chain? How much is it like slave labor? How much is it lax environmental standards? You know what I mean? Like if to compete, how do we, what are each of those components? How do we address all of that?
One way to think about China is there's many Detroits of China. There's many centers of automotive manufacturing, north, south, east, and west. On top of that, there's many forms of ownership. There's joint ventures, there's private Chinese companies, there's state enterprises. So we want to step away from a broad brush and say Chinese automakers are this. So let's break it down one by one. BYD is in a class by itself. It's the only major Chinese automaker that's profitable. It's profitable because it has scale, 4 million cars a year. It is vertically integrated like no other automaker in the world, does its own batteries, has its own battery supply chains, has investments in mining, has a semiconductor subsidiary. 80% of what you find in a BYD car is built in-house. So they've been able to scale, control their costs, and hire world-class designers to really make their products look good. So they're hitting on all cylinders. I know it's not a battery doesn't have cylinders. They're just killing it, BYD, both in China and increasingly globally. So they're sort of like, if you think about Chinese automakers, they're the Tesla or they're the Toyota of China. Then, as you say, just in the last few years, we've had these really interesting startups from the tech sector enter the scene. Those are your Xpengs and Li Autos and Neos, and more recently, Xiaomi, big smartphone maker, and Huawei. These tech billionaires have come into the auto industry and infused it with phenomenal capabilities when it comes to software. And we all know that the industry globally is going electric, but the way to differentiate your vehicle is increasingly through software. So this is what makes these companies exciting because they're really good at software. And that's why they're able to list here in the United States. That's your second bucket. They're the ones to watch. Are they making money? No. Are they scaling up? Yes, gradually. But they're still fragile, highly competitive in China. Will they make it? We'll see. but they're the ones to watch. So I call them the Gang of Five Techno Kings. That's Li Auto, that's Xpeng, Neo, Xiaomi, and Huawei. So you got BYD over there, then you got these Gang of Five Techno Kings, and then you've got legacy automakers that are still also quite formidable in their own rights. And I'll just mention two. You've got Geely, which owns Volvo and Polestar and Lotus and the Proton brand, and has a joint venture with Mercedes to build smart cars. That's a 50-50 joint venture. And oh, by the way, the chairman of Geely, Li Shufu, is the largest single shareholder in Mercedes-Benz globally. So they're a formidable group with operations global. South Carolina, they have a plant making Volvos. Sweden, Belgium, they're legit. So watch Geely. And then the other one to mention would be Great Wall, which is kind of a laggard when it comes to EVs, but they're the Jeep of China. They sell more than 1 million vehicles a year. They also have global aspirations. So you've got all kinds of different automakers. You've got the legacies, you've got the BYDs, you've got these new techno kings all duking it out inside China. And probably the biggest trend right now is that there's so much overcapacity in China that there's constant price wars and very hard for most automakers in China to make money. That's why they're super incentivized to export and go into global markets. That's where the profits are. And this is a difference from Japan and Korea. If you remember, Japan and Korea closed their home markets. They made profits at home. Then they were able to export into the United States and Europe at very low prices. They could basically buy market share overseas. With the Chinese, it's the opposite. They're making no money at home. They really need access to the United States and Europe to keep their heads above water profit-wise. So a lot of
Michael,
dynamics.
here's a question. So you've got the tariffs in the US. If Chinese auto manufacturers were to enter the US market but not get government subsidies, not have cheap labor, etc., have to build plants, would they be as competitive as they are in China, or do they have a less limited competitive advantage? Is that why Trump says, you're welcome to set up shop here?
That's right. That's right. That's his bet. He's saying, come on in and compete on a level playing field with everyone else here in North America. You will be subject to tighter regulations, higher safety standards, maybe unions, who knows? And all of a sudden, all the advantages that you enjoy as a manufacturer inside China with your subsidies go away. Now, how competitive will you be?
So that is a question: is if they were on a level playing field, do you think their techniques, technology, etc., would make them competitive in the US, or do you think they'd be
We're in new territory. We don't. The most honest answer I could give you is we don't know, but definitely, if they have a choice, today we know manufacturing in China, whether you're Tesla or your BYD, your costs are much lower because of proximity to supply chains, materials, the speed with which the entire ecosystem moves. So that's true. You take BYD out of that element, and things are going to change, definitely. They're going to be in a different realm. We don't know. We haven't seen it yet.
So, Michael, with the rise in tariffs and all that's going on, and we've seen this in general with China, are they likely to continue to set up plants in other countries to try and circumvent tariffs in general?
It's already happening, led again by BYD, already moving very quickly into Thailand, Brazil, Hungary. There's talk of a plant in Turkey, and speculation about a plant in Mexico. So absolutely, BYD's assessed the global situation and said, "Ooh, the tariff walls are going up. We better get ready for Plan B." And Plan B is manufacturing in country.
And we've seen that if you look at the whatever fixed investment into China, that's dropped down because it looked like money's flowing out now to do this and for other sectors as well. So if you look at the profitability of Western OEMs, are we likely to see a whole string of mergers happening as their profitability, comes into question?
Yeah, the global OEMs are taking it on two fronts, especially the Europeans. For years, they could count on China as a profit machine, taking billions in profits every year. That's going away fast. If you project out 5 years from now, most mainstream global automakers will have exited China. They're no longer competitive there. So the sales and profits that were coming out of China for decades are vanishing. They're taking a hit there. Then at home, they're under pressure from Chinese exports. These 6 million cars are finding, taking share from the Europeans and the Japanese globally, including in Europe. So you've seen in recent weeks, Volkswagen closing plants, laying off thousands. Nissan, same thing. GM just took this big $5 billion hit. Closing Cruise, who know if that's, or stopping the funding of Cruise, who knows if that's related. But definitely Western automakers are on the defensive. They're backing up, hunkering down, saying, we have to find a way to survive this storm. The Chinese are hyper competitive. How do we meet them when they have a cost base that's 25% lower than ours? And so mergers, acquisitions, maybe even Chinese might even start to buy brands. They've done it before with Volvo and MG. Why not some more?
So, that raises the question: can the Western OEMs compete in the global EV marketplace? And if they can't, what do you think needs to change?
I wish I had that answer. I wish I had that answer because we're looking at this, and I spend a lot of time with investors and with the automakers, and they say, damn, the Chinese absolutely dominate every aspect of the EV business, not just building EV car, but the batteries are made in China. The battery cells are manufactured in China. The inputs for those cells are made in China. The processing of the minerals that go into the cells is all happening in China. And just in Indonesia, the Chinese have significant control or ownership of many of the mines around the world. Where is our advantage? How do we begin to compete with this machine of an industry that China's built around EVs?
Michael, this latter point that you're talking to is very much core to what we have been, advocating for, and we're very much in the minerals and the processing side. And China has just had, a 10, 15, 20-year lead in thought process. They've been accessing raw materials for a long time. Made in China 2025, started 10 years ago. We're now at 2025. America, in fits and starts, it started under Trump. It accelerated under Biden. We've come up with the Inflation Reduction Act. There are consumer subsidies, there are production subsidies, but we're now back to Trump. We don't have the luxury of one party system, where you put together a plan and then you just implement it. But we are America more than I think Europe, although Europe is, making measures as well in terms of subsidies, et cetera. But so America is partnering. You have Japanese battery companies here. You have Panasonic. You have the Koreans, and you have. So it's like, how does America competes with foreigners, on its soil, non-Chinese foreigners, maybe Chinese, and that's I believe, I hope. Like Stellantis just signed a joint venture, 50-50 joint venture with CATL in Spain. Yes. I tweeted last night that I expect similar things to happen, in the US. Mm-hmm. Firstly, do you agree with that? That's, will be a key component to us kind of catching up, or do you think the politics of that make it impossible? And answer that question from the CATL side, but also maybe from the BYD side, because there are these concerns, if you're driving a BYD car, and the data is going to China, do those same concerns apply to, a battery, or a cathode, or, a chemical, if we could also welcome, cathode makers and the Ganfengs of the world, to produce? What do you think about Chinese investment in the U.S. as a means to catch up?
So let's take it from the Chinese perspective first. Chinese automakers and battery makers definitely want access to the U.S. market to secure profits, because if they stay at home, they'll drown in overcapacity and they'll just kill each other. So high priority, get into Europe, get into the U.S. From the U.S. perspective, oh God, and just as you say, we're 10 years behind the Chinese across the board in this industry. How do we catch up? First best option, we do it ourselves. But that's extremely difficult to do when China controls everything. We saw just last week Northvolt, the most promising, aspiring battery startup in Europe, declare bankruptcy. So you go, oh, okay, so we probably can't do it alone. And several American companies have been battery startups here and have struggled too for the same reasons. So what's a realistic way forward? Probably to invite the Chinese in joint ventures in which we control 50 to 51%. Those are the terms. Just like China said when American automakers went to China, you have to form these JVs. I'd recommend that the US do the same, with the ambition of building out supply chains here in the United States that we can call our own. Because right now we open up the cupboard and we look, how are our battery supply chains doing here in the US? Very thin. How's our mining, access to mines around the world? Not great. How are we going to get there? Is it possible to get there without the Chinese? Probably not. So it becomes a question from the US perspective of how to do that smartly so that we're not overwhelmed by the Chinese. If they come in, they set up their own shop and they control everything, well, now we have Chinese basically controlling a crucial industry to the United States. We don't want that.
Going back to the earlier question I had, if you break down the 25 to 30% price advantage that China has, how much would you estimate of that is due to subsidies that China puts on?
All in, half.
Half.
I'd say half. Why do I say that? Because, and this is a highly contested topic with a lot of emotion flying around. But when we begin to see China through the lens of a state capitalist economy, we understand that it isn't just a subsidy. Oh, there's a rebate on the purchase of an EV. You can get $5,000 back on this car. You have an entire system set up to make sure that certain companies in this industry in China are successful at home and globally. So what does that mean? It means that energy would be subsidized. Land may be given for free. Taxes might be excused. Exports, you might get some kickback when you export your products. Up and down the line, you're going to get, this is very important, you're going to be have access to low interest loans. You need a loan for $1 billion at 3%, great. Oh, you can't pay it back, we'll extend the terms. All of these forces are in play all the time. It isn't as if here in the United States we have, a $7,500 tax credit. Okay, that's quantifiable and measurable. In China, it's how many levers can we bring to bear to make sure that this company and this industry is more competitive than anyone else in the world. So that's why I say that up to half of that advantage.
But the IRA, so we are getting cheap loans. So GM invested in, Lithium Americas and got a loan at U.S. Treasury rates. It's not 3%, it's now 4.5%. But that to me is mirroring what, China does for a CATL or a BYD. That's just one project, in the mineral side of things. But, Rivian is getting a $6 billion loan also from the loan programs office. So America's catching up in terms of the subsidies, and then you have the production tax credits like 45X, et cetera. Do you think it's taken a long time for the IRS guidance to be passed for that? But and in some cases, states give further subsidies to these companies in terms of free land, America's or subsidized land. The tax rate. Trump reduced taxes to 21%. Fairly competitive. So, like, all of these measures were meant to kind of level the playing field. But are we coming even close to this kind of 50%, or are we still very far away and need to do more?
I think that we've come a long way. Absolutely, from 2020 till today, we've really moved the needle, and we have $100 billion in investments in battery plants, the battery belt in the United States that didn't exist a few years ago. I think the key difference today is that China has the demand side solved. Half of their buyers are signing up to buy an EV or a PHEV today. In the US, it's still 10%. So those subsidies and those policies in the United States, like in China, keep in mind, you mentioned it, Made in China 2025 was launched at the end of 2014. For many years in China, it was going nowhere. Demand for EVs was lukewarm at best. There was a lot of corruption, a lot of fraud. There were companies losing money, going bankrupt. It was highly uncertain for many years. I think that's where we are in the United States until Tesla entered in 2020, and in my view, completely transformed perceptions of electric cars. And all of a sudden, China got traction and took off. And we went from selling 1 million EVs a year to this year, 10 million.
So it was really the Tesla impact was just to drive demand and coolness. It wasn't so much like, okay, Tesla built the Shanghai factory. Now a whole bunch of people stole Tesla's technology because they went to form the other companies.
Both of those going on, Howard. Both of those.
Okay.
So having lived China's for so many years, I can tell you in 2019, I had dinners with the CEOs of Chinese automakers. This is 2019, including BYD. And people kind of forget this now, but BYD sales 2018, 2019, 2020 were down year on year. There was not any certainty that this whole major electric experiment was going to work. And I talked to the CEOs of other Chinese automakers, and they said, electrics, I'm not sure. Maybe a niche. Maybe. But no customer really wants an electric car. That's our problem here in China. They're seen as, just commuter cars and not very desirable, not good looking, and they don't have the range and et cetera, et cetera. That was as recent as 2019. Enter Tesla. It starts manufacturing the Model 3 first quarter of 2020. And I began talking to consumers and people in the industry. And there's like a big shining light went on and said, oh my goodness, electric cars are sexy. They're aspirational. They're the new thing that the Chinese consumer wants. And there's a knock-on halo effect for NIO and XPeng and others. Remember, first quarter of 2020, NIO needed $1 billion lifeline. It was going to go out of business. So that's how powerful Tesla's entrance into the Chinese auto industry was for China. Chinese people might disagree and everyone has their own opinion, but you take away, there's a before Tesla and an after Tesla in China. You take away Tesla from the China market and industry, I'm not sure we're anywhere close to where we are today.
Okay, that's very useful. Of the other 20, the 30% cost advantage, the other 50% that's not subsidies, how much would you estimate are due to lax environmental standards in China?
That's harder to measure. I appreciate the question. That's harder to measure. I think most of the rest of the savings is the reality that supply chain, the global supply chain, the best of the best in the world, of Japanese, German, American, Korean, and Chinese suppliers are all concentrated there in the People's Republic. So when a BYD wakes up in the morning, or a NIO, or an XPeng, or a Xiaomi, they don't have to worry about building up their own Keiretsu. It's already there in their backyard. And it's been there thanks to decades of investments by global suppliers to come into China and set up first-class supply chains. So they have the scale, they have the proximity, and the speed. I think that's a huge edge that China enjoys over any other market in the world.
So you're talking about cathode making, you're talking about chemical processing, you're talking about battery. You know, they've just
Everything.
the best of the world came to China, and then China educates a lot of their population in these skills.
Yes.
I think like even Apple says this, like we couldn't replicate our manufacturing capability. We have hundreds of thousands of Chinese engineers who we just don't have those skills in America today. But you're saying that the bulk of the other 50% are not necessarily the environmental or the slave labor, but it's more this kind of vertically integrated supply chain?
Yes, because if you go into those plants today, you're going to see highly automated, a lot of robotics. When I talk to companies on the ground, they say the difference is I want to get something done, the speed with which everything moves, because everything is in place and ready. They don't have to even think about going overseas or sourcing from some supplier far away. It's right there.
Okay, so America has responded with the IRA, $100 billion in the battery belt. We are subsidizing, so that's a way to level the playing field. And on the resource side, you know, they're again the guidance. You know, the Inflation Reduction Act, and then it took 2 years to kind of like, you know, of lobbying. You know, they exempted graphite for a bit, and like there's been a lot of wrangling and uncertainty, but guidance is being passed. You know, Trump tweeted yesterday, you invest $1 billion, you're going to get permitted. You know, welcome to America. You know, so I think like this GM, you know, Lithium Americas and Ioneer is going to get a loan. This is just lithium, but there have been investments made in graphite and nickel. I don't know, you know, you're mainly a car guy. You know, I don't know how closely you know like the cathode space, et cetera, but it like you also mentioned on the demand side, it was Tesla's entry that really made it cool again. If I look at the demand side in America, you've had, you know, this battle, you know, Democrat, Republican, you know, this huge headwind against EVs by the Republicans. But now with this bromance with Elon Musk and you know, Republicans should be very happy driving Teslas. Like I'm speculating that we're going to see, probably too soon, but instead of Cadillacs, you know, for the presidential motorcade, you're going to start seeing a whole bunch of Cybertrucks and other Teslas.
100% with you. Yes.
Okay. And Trump, the best marketer in the world, right, is going to be helping to market Teslas, right? And, you know, I don't know how plugged into like the politics of, you know, you've been back in America now for 6 years. You know, you're from Detroit. You know, we were joking before we started recording. You went to Michigan graduate school. You graduated graduate school when I graduated undergrad, and we had a similar professor, you know, Ken Lieberthal, you know, who is very much a China-phile, and he was telling me 30 years ago, in 30 years, you need to worry about China. You know, here we are.
Yes.
You know, but Trump's not super pro-union, right? Like under Biden, everything was like, okay, Inflation Reduction Act, but we'll give you the subsidies, but you got to hire union labor, which like kind of raised the cost of a lot of things.
Yes.
A lot of the, you know, the battery investments are now being made in southern states. Obviously, Elon has moved to Texas. You know, there's that dynamic. So I just think addressing the how do we compete with China? Like we're solving on the subsidy side. You know, the integrated supply chain, it doesn't happen overnight. It's going to happen over 10 years, right? But the momentum is there, and the permitting regulations that were or the deregulations that Trump is seeking to implement, I'm feeling optimistic that we will compete, like more so than Europe or other places. I feel like America, and as an American, I'm hoping, that we can compete, but the tariffs make sense. What do you think? Are we going to get this right? And are we going to, will the acceleration of electric vehicles, go to that 50% like you've seen in a very short period of time in China, happen here, and in what time frame?
That's the single biggest difference between the United States and China. If we step back and look at it, imagine if half of the people in the United States next year started buying electric vehicles, started buying Teslas and Rivians. Suddenly, all those investments and subsidies start to make sense. And then investors are going to be even hungrier to pile in and say, yes, let's build out those supply chains. So I think the key going forward will be the demand side. And here, it's not so clear how this will play out because so many people in the middle of America in particular, I go back to Detroit and people are like, why do you drive an electric car? What? You drive a Tesla? No, we don't like electrics around here. So there's still a lot of work to be done in the sense that consumers in America are still hesitating when it comes to electrics.
But Michael, isn't it fair? Isn't it fair to say? I mean, if you look at the average cost of an electric vehicle in the US versus the average of a car, it's just out of whack with China. China, 65-70% of BEVs and PHEVs are competitive versus ICE, whereas in the US, the average price is still too high. So, is it going to be in conjunction in that shift with the introduction of much cheaper and more competitive models?
That's right. Then it starts to flow. Then you have scale. Then you have lower costs. Then you have some profit. Then your suppliers are making money. If we can get to that price point that's attractive and we can scale up on that. Keep in mind, BYD, I saw a stat the other day. Of the 4 million cars they'll sell this year, half are priced under $25,000. Okay.
The Seagull, I think the Seagull's like 11,000 or something.
11. Yeah. So we don't have that in the US. And then in order for us to get traction, we need that kind of price point. And then everything else starts to come together. Demand is the big risk here in the United States.
But again, even in the US, there's a good level of demand around the $20,000 to $30,000 mark. So you've got to get competitive in that area.
Mm-hmm. And that's really where Tesla is hopefully going to be introducing a new model in the first half. You mentioned Northvolt going bankrupt, and maybe a startup, to compete with the CATL is just not going to happen. But what about Tesla's 4680? And what about Panasonic, SK, LG? I think the Ultiums had issues, but can they collectively compete? Each of those companies versus CATL.
You're raising a really big topic in that is the future parallel supply chain. So the United States and its allies build out its own battery and battery supply industry that provides national security, economic security, and is not dependent on China. Is that the goal? And if so, let's be clear about that goal. Like, this is a Sputnik 2 moment. China's way out in front of us. They want to compete with us. We may need to dig deep with our allies and build out our own thing. If that's the case, the good news is we have Tesla in our camp with their batteries. We have Panasonic, the Koreans. We can get there. If we have the nerve and the patience to do so. The risk is, as with Northvolt, oh God, we can't do this ourselves. Okay, never mind. CATL, let's do a joint venture in Spain. And then things cascade in a different
Well, I
direction.
mean, why can't we do both? I mean, Panasonic is, why can't Stellantis do a CATL deal? Ford wants to do a CATL deal and not just be like a technology license, but a 50-50 or 51-49 joint venture so we can learn and catch up.
Yeah. If it's at 51-49, great point. I think it has to be. The China experience tells me if we license it, we're never going to catch up.
No, I don't think we need their expertise on the manufacturing side. So do you think I believe we should do that, right? I believe that there's a big negotiation to be had here. I mean, fundamentally, I think America has problems. China has problems. There's no reason to be going to war with each other, for the next 5 to 10 years, right? Let's, it's a different adversary than the Russians were. And yes, they're not as friendly as the Japanese and Koreans were when we welcomed them. The Fremont factory of Tesla was an ex-joint venture between, Toyota and GM, right? The NUMMI factory. So why, it seems logical to me that that's what we should do. More Stellantis, CATL, but 50-50 joint ventures. So do you think that's likely, or do you think, because you have China hawks like, Rubio at Secretary of State, but then you have, Perdue as the China ambassador. I've been looking at every single one of there are hawks and doves, but you got Elon Musk whispering in his ear, 50% of his business is China. I think the bias is, logic and common sense will be, there's a transaction. This is a business transaction, like the posturing on critical minerals and semiconductors, et cetera. There's a deal to be had where we'll welcome manufacturing here. And Trump's actually said it on the campaign trail. So my hope and the optimism is by the second half of next year, you're going to see details of that, and that's going to spur further demand growth, further excitement, in the supply chain, which we represent.
You got a stronger supply chain. You have lower costs. You have more efficiency. We learn things from the Chinese. That would be a great outcome. I think the U.S. might want to look at China's own playbook, starting back when I first went to China in 1986, and then started my first company in 1990. What did China do at that time? It said, "Hey, you want access to our big, beautiful market here? Here's the terms. You won't export to here. Forget it. We have 100%, at the time, China had 100% import duties. You will manufacture here. And when you manufacture here, you will have a Chinese partner, and that Chinese partner will own at least 50% of the business. And by extension, we, China, will determine outcomes. We're in charge." I think the United States should say, "Hey, that's a beautiful playbook. Let's just adopt your stuff and apply it to where we are now," because we're as far behind in batteries today as China was in internal combustion engines 25 years ago. It's the same thing. Just go, "Okay, thank you for the playbook. We'll use it here."
Okay. You think we should do it? Do you think we will do it? You think Trump will do it?
I can see a scenario where he says, "Look at what I've done. BYD's bringing a $3 billion investment in. They're going to hire thousands of Americans, and they're going to build out our supply chains in Kansas." Wow. That's all plus. That's all upside. I could see him doing a deal like that.
Great. I
don't
have
know,
one.
but
I'm with you, and I'm hopeful. My other question is a big thing right now is China's stimulus speculation. Okay, you've seen that they've invested, consumption is very low. It's all exports has been always their stimulus, right? And America has always just been okay, let's export low labor cost, and then we'll be the buyer of all the products. So here we have in the U.S. stimulating supply, but in China they're now talking about stimulating demand. And if they did stimulate demand, they wouldn't have to export all those cars. So we're in China for a long time. You've watched Chinese, stimulus programs, et cetera. This is currently very topical. Do you think What do you think of it? Because it's a major impact. If China has a major stimulus, it also will impact, the price of commodities. What's your read of the current speculation on China stimulus and whether or not it will be applied to consumption?
They were definitely running the export to the hilt to everywhere as much as we can across all industries for the last few years. And now they're sensing globally that there's a pushback. That's enough. No, China, you can't. It's not just a one-way street. And the domestic market has been weak, and they were hoping it would get strong all by itself. Hasn't happened. So, bottom line, yes, I think for the next year, there's reason to be optimistic that China will say there's limits to how much we can export. So we better cultivate demand here at home as well. That's good news, at least for the short term in the China market.
And do you think they'll stimulate car EV consumption?
Yes, definitely. We're already seeing that this quarter with record deliveries in EVs, including Tesla.
Okay.
There's reason for optimism inside the China market. Having said that, keep in mind it's a brutal industry and very few companies are making money there. And the consumer confidence levels are not great. But the government, for the first time, acknowledged, oh, we can't just export our way out of this. The world is getting full of our products and saying that's enough. So they're pivoting a little bit to the domestic consumption.
Okay, that's great. If we got domestic demand coming out of China, and if we get domestic demand coming out of U.S. and Trump, and there's
We'd
a
be in
grand
great shape.
bargain, then that's demand shock purely on electric vehicles, and importantly, we're following energy storage solutions and other things, data centers, AI as demand drivers. Michael is only focused on the EVs here, so there's a very positive EV story. I think if it unfolds, to be continued. But I'm optimistic, and I'm going to
One of the
sign off,
points
Michael, because I
mentioned, Howard, earlier that's highly significant is that here we have a new president with his right-hand person being Elon Musk. That's huge. I mean, imagine if Elon wasn't in the picture. And in the last year or so, demand for EVs has been shaky at best. It's growing in the United States, but not at the pace that people expected. With Elon right there, major influencer, things could get a lot more interesting for electrics in a hurry here in the United States.
So, Michael, I only have one last question, and that relates to China. You mentioned as a percentage of the price differential, how much is subsidy and so on. But I cover the economics and what's happening, and a lot of wealth in China is linked to property and the stock market, and those are both doing badly. So that relates to domestic consumption and what they need to stimulate. But government debt, state bank debt, and personal debt has now shot over 300% of GDP. So China is, from an economics point of view, and then you can go down the demographics wormhole and how the population is aging and going to drop off. So my question really is, can China keep up this level of subsidies if you've got huge percentage of unprofitable industries across various sectors because they've been export driven? I mean, this is the issue, right? Everyone says stop dumping. Those guys dump steel, they dump cars, they dump solar panels, they dump EVs. So how much longer do you see it from your side before, China might have a problem funding itself?
Based on my experience living there for so many years, the Chinese have this expression called "neng chi ku," which means they can eat a lot of bitter. It means they are willing to tolerate a lot of pain in order to reach an objective. And I think China's overwhelming objective is to, as Xi Jinping has said, take center stage. They're going to be the ones in charge. They'll make the rules, they'll dominate industries. That's their vision. no matter what it takes. Related to that, their economy domestically is not in good shape, but their currency is not subject to the same things that currencies of other open market economies are. So I sense that China can continue to just sort of grind it out in industry after industry until they're in a dominant position. And crucial to that is continuing to have access to the US, Europe, and other. If they don't have that access, then things get very hard because they could drown in their own overcapacity at home. So we have a lot of leverage in the West in terms of the extent to which we allow them access to our markets. That's going to be the key going forward.
Yeah, look, unrelated, but I guess it's a Mexican standoff because you've got massive trade surpluses in China, and then I know it's falling, but they also fund the US's debt. So it all gets, as Howard says, I think he's right. There's a grand bargain to be had here, and this is the way it's going to go down. But we shall see in terms of domestic consumption and driving that. Otherwise, it's really just ICE giving way to EV as that continues and putting Western OEMs to the test because they just don't see. You mentioned it. I look at some of the characteristics and the quality of the cars that they now sell as EVs at the price they sell them at in China. It's just mind-boggling.
It's not incremental. It's not, oh, this is 5% cheap. They're high quality cars at much lower cost, and they're ready to deliver those cars. They're hustling. They're not laying back. They're saying, we're pushing it. BYD up to 4 million cars this year. That's equal to Ford, bigger than Nissan, bigger than Honda. In a couple more years, they'll probably be bigger than GM. They're full acceleration, building really impressive vehicles at low cost. That's what they're going to go with until such point that they're told that they're not able to get access to our markets. And that's where we are. That's where the tension is today.
Excellent. Well, thanks very much, Michael, for coming on. It's great to have a chat. We've been following your stuff, and it's hard to keep it. We really have to keep aware and our finger on the pulse. Otherwise, this is running away with us. It changes so quickly.
It has changed. Yesterday, Northvolt was the greatest thing since sliced bread. So much promise. And then today, oops, it's not going to make it. Yeah.
Yeah. There you have it. Thanks very much.
Thank you. Thank you for having me. Stay in touch, yeah?